for tuning in to our webinar where we will be talking about managing risks in clinical trial finance and accounting. Joining us today is Crowe. We're so pleased to continue to partner with Crowe and have their thought leadership on today's webinar. What we're here to talk about, the regulatory landscape and audit matters. There is a lot going on that is impacting life science preparers. So we'll go through that, talk about some of the critical audit matters that pertain to clinical accruals and R&D expenses. We'll talk about the common internal control risks and process pitfalls. What are the key considerations for audit readiness of R&D accruals? And how might and how can an automated platform support your internal control over financial reporting and your overall audit readiness? So joining us today, first I'll just say hello to everyone. My name is Sharon Langen. I head up partnerships and community at Auxilius. Later in today's webinar, you will hear from Erin Warner-Gwill, who's the COO and president here at Auxilius. Erin will give us a quick walkthrough of our product. There's a lot to show, but we're going to really focus it on what matters when it comes to controls and mitigating risk around clinical trial accruals. And kicking us off today will be Ryan McNally. Ryan's a senior consulting manager at Crowe, and we are delighted to be working with him again as he brings tremendous thought leadership. What we plan to learn today and what we hope you walk away with is giving an update so that you understand and have purview into the evolving accounting standards and their implications for clinical trial accounting, because again, there is a lot happening there. Also, appreciation of the challenges and complexities. If you have clinical trial programs, looking at the list of folks that are joining us today, there are a lot of clinical stage biopharma companies here. So what do you need to think about in terms of mitigating risk? And also, what are the audit considerations and those typical audit procedures that we see around R&D expenses and accruals, specifically where this has become a common critical audit matter. We'll talk about some strategies for companies like yours to mitigate risks to trials and ensure your financial reporting compliance. And again, lastly, we'll visualize how can technology bolster controls and enable audit readiness. So with that, I'll turn it over to Ryan. We'll start into the regulatory landscape and audit matters.
Awesome. Well, thank you, Sharon. It's a pleasure to be here today, and thanks so much for having me on. As Sharon mentioned, my name is Ryan McNally. I'm a senior manager at Crowe LLP within our consulting practice. For those who may not be familiar with Crowe, we're a full services, professional services firm. We offer audit, consulting, tax services, and we service many different sectors, including biotech, life sciences, and healthcare. Personally, my experience has been focused on internal audit and internal controls. So assisting my clients in the life sciences space with standing up and formalizing their internal controls to be more operationally effective and resilient, and also meeting their compliance requirements, particularly with their external auditors. So what we wanted to kind of just start the discussion here today is just kind of bringing some info on some trends that are prevalent today from a regulatory perspective, and also some key audit matters that may be pertinent for folks on the call here. I think the overarching trend that you'll hear me kind of emphasize in this section is that there's really been a push towards more detailed reporting, more disclosure, which I think really begs the question for companies to think about if they have the processes, the systems in place to be able to gather the data that needs to be reported on and disclosed, and also meet those reporting deadlines and requirements. The first one I just want to touch on here is segment reporting. So in November of 2023, FASB issued a new accounting standard, 2023-07, which amended some of the segment reporting guidance that was out there, really to accomplish a couple goals. One was to improve the information that a public company was disclosing about its reportable segments, and also address some investor and shareholder requests that they wanted more information on those reportable segments, particularly around expenses at the reportable segment level. Those changes went into effect in December of 2023 for the annual filings, and then most recently last December for the interim filings. The standards didn't really change anything in terms of how to go about identifying the segments or who the chief operating decision maker would be. But some of the key things that it did change was On an annual and interim basis, significant expenses at the segment level would require to be disclosed in the annual and interim reports if they're regularly provided to the CODM and included in what gets provided to the CODM. So if you're regularly reporting to the CEO, for example, on your R&D expenses by segment, that would be something that would need to be disclosed within the annual and interim filings to the SEC. Also, changes in the disclosure of who that CODM is and what their title and position was. That is also a new requirement that came out with the new standard. And then also, if you're changing kind of how those significant expenses are being identified, there may be a need to recast any prior period reporting to kind of adjust to what your current segments and current significant expenses are going to be going forward. So as you can see, kind of as I mentioned previously, this is kind of a trend towards more granularity, more reporting, more disclosure that the FASB and SEC are looking for. Kind of along those lines, that bottom one there that you see on the left-hand side, DISE, which stands for disaggregation of income statement expenses. So that was a new standard that FASB had issued last year, 2024-03. And again, the purpose here was to provide more data to make decision-making more useful for investors and giving them more insight into the types of expenses that are commonly kind of rolled up in the income statement. So this is only applicable to public companies, and it's set to go into effect in December of next year in 2026. But under this new standard, public companies are required to disaggregate those income statement, what they call captions. So think about your cost of goods sold, your SG&A, and break those down into specific expense categories within the footnotes to the financial statements. They've called out specific expense categories that need to be disaggregated, which is purchases of inventory, employee compensation, depreciation, intangible asset amortization, and then really anything else kind of outside of those categories kind of falls in this other bucket. That doesn't really change any of the kind of how the income statement is presented itself. This is all kind of in the footnotes to the financials. And they want the standard requests that the information is disaggregated in a tabular format, so it's easy for investors to read and digest. So if we think about it from a life sciences company perspective, and we think about kind of R&D in particular, I think one of the biggest items that will need to be disaggregated from that R&D expense caption will be kind of the employee compensation that's attributable to R&D activities. The standard also requires that any expenses that are kind of deemed reimbursable, so think about any cost sharing or cost reimbursement arrangements that you may be into, that also needs to be disaggregated and disclosed as well. As it relates to any expenses related to clinical trial accruals, those actually aren't required to be disaggregated if they meet certain conditions, which is if the expense relates to an obligation that will be settled in the future and there's uncertainty around the timing of that settlement, or if that expense is based on an estimate of a future expenditure. If those criteria are met, then the clinical trial accrual expense related to R&D would not need to be disaggregated out within the footnotes. So again, just kind of another new standard that's getting at more reporting, more disclosure, more granularity, and again, kind of begging the question of, do we have the processes in place and the systems to be able to meet those requirements and disaggregate those expenses out according to the standard? Sharon, I think we can move on to the next slide. I wanted to spend a little bit of time on the SEC comment letters here. So kind of in addition to these regulatory and standards trends, we wanted to touch a bit on what we're seeing and coming through in SEC comment letters and the trends there. So these comment letters are essentially correspondence with the SEC staff to companies regarding their filings, just aiming to make sure that there's clarity, accuracy, and completeness in the disclosures, and protect the investing public from misleading information. As it relates to kind of R&D specifically, it's one of the most common topics that the SEC comments about in their letters to life sciences companies. They're really focusing on the quality of the disclosure related to R&D costs, and really asking frequently for companies to disaggregate their R&D costs by major product and projects. And you can kind of see on the next slide will be some examples of those types of comments that companies are receiving. A common theme that you'll see is, please provide a breakdown of your expenses. Please break out expenses by product candidate. So again, kind of speaking to more granularity in data and reporting, which is needed not only to meet kind of these new standards that are coming out, but also being able to respond to the SEC in their comment letters. I think the last point that I'll make here is just that, accounting and SEC reporting teams, as we've seen here, are being asked to disclose more, but you're also under the same kind of reporting deadlines that haven't changed. So you're asking to do more in the same amount of time. So again, the need for an effective and efficient processes and systems to be able to gather the data that to be able to meet these requirements is paramount more than ever. So Sharon, I think we'll kind of hand it back over to you to talk through maybe CAMs.
Yeah. One thing I want to also pull out here, because this is, thank you, Ryan. In addition to the increased granularity needed from a reporting standpoint with segment reporting, and increased higher bar for disclosure, one thing that kind of jumps out to me is also SEC asking in some instances to explain how your R&D costs are managed and how they are reported within the organization. So these will be provided in the recap video of this webinar after, if you want to dig into it, but I think these are some great examples. So yeah, with that, audit and assurance over clinical trials costs is typically constituting a very high level of effort, as well as auditor judgment to evaluate the assumptions and the inputs. And so, to talk about CAMs, that is really the leading critical audit matter for clinical stage biopharma companies. And while a critical audit matter is not detrimental or calamitous, they definitely raise the stakes and they spotlight these critical matters as highlighted in the audit. Many public filers are emerging growth companies in the life sciences industry and therefore not technically required to disclose CAMs in their audit reports. However, as we've seen, nearly half do voluntarily adopt and apply CAM requirements. And so that is why, as you see here, there's over a third of public biopharmas today have had a CAM related to clinical trial accruals in the last year. Why is that? Excel cannot easily translate assumptions and judgments. Workbooks can create challenges for auditor review, and data volume at scale is difficult to test. So these are just really creating, what we would qualify as a perfect storm. When you read through the language issued in many of these CAMs, there are some clear themes here. It's the financial materiality. These are trials that are also heavily outsourced and reliant on third parties to perform some of the activities. There is a high reliance on judgment, and the data and the audit complexity makes this a critical audit matter. Ryan, question for you through the auditor lens, why do you think CAMs are so frequent in this cost category? And what does that mean for management teams in finance and accounting? What can or should companies do?
Yeah, it's a good question. And I think, to answer the first question on why, clinical trial accruals are typically highlighted as a CAM, I think you first can look to the PCAOB guidance on what they consider to be a critical audit matter, and it's really two criteria. One is that a CAM should be it should be material to the financial statements. And two, it should typically involve an area that's can be challenging, subjective, and complex for an auditor to audit. So if we think about clinical trial accruals, they really meet both of those criteria. As you mentioned, Sharon, they're typically one of the largest expenses that a life sciences company will have. And two, they can involve a lot of that subjectivity and complexity in determining if the accruals are accurate or not. A major contributing factor to that subjectivity, that complexity, is that, as you mentioned, accrual estimates can often be done in Excel spreadsheets, which, if you think about it from an auditor's perspective, that really increases their audit risk that they may miss something in how they go about testing something done so manually. So any area that's kind of designated as a CAM needs to be communicated to the audit committee and also disclosed on the 10Ks for public companies. So I think the ultimate kind of so what here is that CAMs usually result in greater scrutiny from the auditors, as they need to truly understand and be able to audit how the accruals and the estimates are being determined and vetted. And so there's just an extra level of detail, I would say, that auditors would need to go into in order to thoroughly audit any area that they designate as a CAM. And unfortunately, when auditors need to do more, that unfortunately means kind of more questions, more requests for management. And so some of the things that I've seen auditors perform in terms of their testing procedures as it relates to clinical trial accruals, and these are things that Sharon will be talking about in a little bit detail later, are evaluating and testing the design and the operating effectiveness of internal controls over how the R&D accruals are being estimated. For a sample of R&D projects or clinical trials, they'll review the contracts, purchase orders, SOWs, other contractual documentation, and then test the completeness and accuracy of the data and information used in determining the estimates, and also validating the assumptions that management uses when they're making the estimates as well. They'll perform kind of corroborating inquiry with the company's clinical operations team, just to understand the nature of the studies and the progress of them. They'll obtain and inspect third-party estimates from the CROs, corresponding invoices, and validate evidence of payment. So all these things may be things that your company may be handling as well with your auditors, but when clinical trial accruals are designated as a CAM, it just usually means that the auditors will do a little bit extra to ensure that their audit conclusions are really buttoned up.
Thank you, Ryan. So this kind of leads to our next topic. If you can speak a little bit to some of those common internal controls that can help to mitigate risk in this area.
Yeah, absolutely. So, from an internal controls perspective, we wanted to spend just a little time talking through some of maybe the common pitfalls that we've seen working with our clients, which have led to either control deficiencies or audit adjustments from the external auditors. The first two items on here primarily stem from the risks that we talked about of performing these type of processes and tasks manually in Excel spreadsheets. So one risk that we typically see is a risk of doubling up on R&D accruals, especially if there's any overlap with any other accrual processes, such as a late AP accrual or an open PO accrual process. So as an example, what we can see sometimes is that a company will work with its CROs or its vendors to determine how much kind of life-to-date expense they've incurred on the studies, and then they'll accrue for whatever they haven't been billed for. However, the risk kind of comes when they end up receiving an additional invoice from that vendor and then accruing for the work that has already been accrued for. So essentially doubling up on the expense. So I think one of the takeaways is that if you have separate accrual processes that are owned by different people or teams, it just really increases the need for strong communication throughout the close process to just ensure that those journal entries are being recorded properly. And then depending on the timing of each accrual, we typically recommend maybe implementing a threshold to just do that an additional level of review as invoices kind of come in late in the close process. So for one of my clients, that threshold is $50,000. So any new invoices that come in after AP has been closed, that's over 50K, there's just an additional validation and check to make sure that we didn't already accrue for the services and this invoice in a separate process. And then kind of related is what we also see is accruals, which are incorrectly recorded as prepaids. And again, this kind of stems from spreadsheet integrity issues. And it can also arise from not having strong kind of input controls when there's a new change order or a new contract that can increase kind of your life to date expected expense and therefore move a study's position from a prepaid to an accrual. So these are just some common pitfalls that we can see. And again, really the root cause, I would say, is with companies that are doing this all in Excel spreadsheets, which is understandable given manual error can lead to manual processes can lead to manual error. So Sharon, I think we can move to the next one, which we'll talk about just some internal controls that we recommend life sciences companies having in place to kind of minimize the risk of those pitfalls from occurring. And I think what you'll see when Aaron demos the tool a bit is that Auxilius is a tool that can really help streamline and automate many of these controls, or at least make the data being used in them more controlled, and therefore reducing the risk of any error or misstatement. We'll touch on like some of the best practices for each of these items in the next slide, but I think in general, when we look at internal controls, we typically see a suite of controls that touches on the following. First, having controls over how we're accruing for the clinical trials. This includes controls when a new study comes online, kind of how that initial budget is set up and reviewed against either the tool or a spreadsheet that is being used for accounting purposes. So if your process is more Excel-based, is somebody doing a review of how that budget was set up in the spreadsheet and doing a validation to make sure that it's matching against what the contract is stating. And then similarly for change orders or amendments to contracts, is there a way that the owner of those accounting spreadsheets is being looped in on any new change orders so that the spreadsheets can be appropriately updated and reviewed? A common process and control that we've seen here is usually like an email that would be sent by accounting on a quarterly basis to the legal team or other stakeholders who would be knowledgeable or have authority to execute contracts, and just confirm if there's been any new contracts, new change orders, amendments that accounting would need to be aware of from an accounting perspective. And if you have a contract management process and system in place, that's even better, and you can perform a quarterly review of any new contracts or amendments that came through that system that need to be looked at from an accounting perspective. Now, once the study comes online and the trial begins, a control activity should occur to review kind of the periodic progress reports from the CROs on the costs that have been incurred to date. From a control perspective, we typically recommend that there's a couple kind of layers of review occurring in that process. For one, having someone in the organization who works closely with the CROs and is intimately knowledgeable of the details and the progress of the studies. They should be doing kind of that first level review of the estimates, since they would be the ones most knowledgeable and most aware if anything on those reports is inaccurate or doesn't seem quite right. So in other words, we wouldn't recommend just simply providing kind of the estimates to the accounting team to review. to accrue whatever the CRO is saying, since the accounting team may not be the best team to be able to tell if those estimates are appropriate or not. And that's something that auditors look for, is getting an understanding of the review process for these types of estimates and the precision of the review. And that the first consideration there is the reviewer themselves the right person to be doing the review. Now, as kind of actual costs begin to get incurred in the trial, we typically recommend some sort of I would say monitoring, data analytics, maybe a fluctuation analysis to be performed that may help identify where errors may exist in those estimates, and whether your accruals on the books may be sufficient or not. This could include comparing your actual expenses to budgets, forecasts on the trials, or comparing actuals from a prior period to current period perspective. And there may be perfectly, legitimate and rational reasons why there would be significant fluctuations, but reviewing your studies at this level can help flag things that may appear out of whack and may need to be looked into further. Another kind of reasonableness check that a client of mine would do was what they called kind of a growing accrual review, which was basically a review at the study level and looking for trials that had significant accruals in proportion to the total costs that were actually incurred. So this was a way to identify any CROs which may had not billed them timely or had delayed billing to them, or for any invoices that maybe got mapped to an incorrect study. So for them, if the current kind of accrual position was greater than 20% and $1 million compared to what the lifetime to date expense was, it was looked into further and explained and adjusted if needed. So as we move to the next slide, I can kind of chat on maybe just a couple best practices. One thing that the auditors love, and just in general, is documentation of policies and methodology, just because it gives them a ready-made standard to audit against. So from a clinical trials perspective, this could include kind of the methodology that you're using to accrue for clinical trial costs, if it's straight line or a spread methodology. Also kind of if you have a delegation of authority for kind of who needs to be reviewing and approving contracts, budgets, et cetera. And I think moving into having things documented in a policy and SOP really just helps kind of reiterate and build a control-minded focus amongst the team. Next, if you're performing kind of your accrual calculations in Excel and relying heavily on estimates from the CROs, and I would place a lot of additional emphasis on having strong kind of spreadsheet controls to ensure that there's completeness and accuracy of your data being checked through the review process. Some ways that I've seen this is through having kind of check totals or reconciliations to either ensure that the data ties back to your IT systems like your ERP, or even just kind of making sure that data is being transferred from tab to tab within your spreadsheets completely and accurately. So thinking of ways where there could be risks in the data being not transferring over appropriately, or something could be incomplete or inaccurate, and building in kind of those formulas and checks to ensure that that isn't happening, which is always a good practice. For those that are kind of utilizing IT tools in the process, or considering getting a tool such as Auxilius, we typically recommend ensuring that your controls around your R&D accrual application follow the same IT controls that you're following for your other IT systems like your ERP and anything else in your environment. So, having the same controls over logical access, considering SOD, considering change management. What we typically see sometimes is that the owner of kind of the R&D accrual application is somebody not in IT, so they're kind of more kind of in the business, and therefore it can be kind of out of sight, out of mind for from an IT control perspective. So just ensuring that you're following kind of whatever IT controls that your company has, applying them as well to the new system is always recommended. And then also obtaining a SOC report from the IT application vendor as well, which Auxilius does have a SOC 1 Type 2 report, which from an audit perspective is really the gold standard, which is great. So obtaining that report every year, doing a review on it to make sure that the internal controls at the application side are performing and operating effectively is always a great practice. So as we kind of transition into kind of more of the technology piece, I kind of want to just kind of close, I think, my piece on maybe providing kind of an auditor's perspective on the pros and cons of kind of using technology in this space. You know, there's a lot of benefit from moving down a path towards automation. But, you know, kind of starting maybe with the cons in this area is, you know, the first is that any application introduces additional needs and considerations from a controls perspective. So, you know, a tool or an application is only as good as the data inside of it is useful and can be relied upon. So if you have ineffective IT controls over kind of who has access to edit the data or who can make changes to the system, and that can really create obstacles into how powerful a tool can be. And if you're a public company that needs to comply with SOX, if you don't have these IT controls in place, then you can't effectively, auditors will not be able to rely on the data coming out of that system. So that's always a critical consideration for public companies. And utilizing a tool also, you know, requires you to rely on the effectiveness of that application and the controls that the vendor has within their organization. So if you have a vendor that's maybe not as reliable, you know, isn't like Auxilius and doesn't have a SOC 1 Type 2, then you may not be able to get that comfort that you would like around the controls that they have over how they're managing the system. And then lastly, you know, any workflows or custom reports that you have configured or set up within the system, that from an audit perspective will always kind of require kind of ongoing validation of those things, you know, at least on an annual basis by your auditors. And again, if you don't have those IT controls that we talked about in the beginning, many audit firms won't be able to rely on those workflows that you've built and set up. Now, on the flip side, there's a lot to be gained by utilizing a tool or application. You know, I would say, generally speaking, that auditors have greater confidence in data coming out of a compliant and well-controlled system, which should lead to less questions from your auditors and less time that they would need to spend trying to audit those spreadsheets with, you know, 30 plus tabs in them. So anytime that spreadsheets are eliminated, you know, that's a win from an audit perspective, generally speaking, just because that likelihood and risk of human error is so greatly reduced. And so, you know, and then also kind of with greater confidence in having a system where your data is residing, you also get greater and more meaningful insights that can be gleaned from the reporting that a tool can offer. So, you know, reports that are, you know, right at your fingertips, you know, they're a 10-second download away, rather than needing to spend, you know, hours slicing and dicing data in Excel through pivot tables and other means. That is not an efficient use of time for many teams. So just wanted to provide that perspective from an audit lens. And then I think I'll hand it back to Sharon, and we'll kind of talk through maybe kind of how the tool can, and Auxilius in particular, can help with a lot of these things.
Thank you, Ryan. Appreciate that. And certainly for folks on the line, if you have questions for Ryan related to what he just covered, pop them in the chat. We'll shift now for the balance to talk about Auxilius as a tool. Several of you on the line are familiar with Auxilius, but for the sake of completeness, we want to introduce who we are. Auxilius is purpose-built to automate R&D accruals. power dynamic, driver-based forecasting so that biopharma financial teams can make informed decisions, drive visibility, and purpose of why we're here to talk about this today is to remain compliant. We don't replace industry agnostic FP&A procurement tools, and we integrate with main ERP systems. Reflection also of Auxilius is our customers. We are currently supporting over 70 biopharma companies ranging in therapeutic focus, size, and scope. And, as Ryan mentioned, important things to consider and make sure is IT controls that are effective for the tool to be relied upon, an ongoing assessment of reliability of the application or vendor, and the ongoing validation of configuration and reports. And so we'll go into that, and that is what we are and who we do. As Ryan mentioned, we are SOC 1 Type 2 and SOC 2 Type 2 compliant. But Erin, I think you're there on stage if you want to touch a little bit upon this slide here.
Hi, everybody. Can you hear me? Just want to make sure.
Yep.
Cool. Good afternoon. Yeah, and I think we'll talk a lot about this as we jump into the tool. I think it's really important. I love a lot of the points that Ryan made in terms of like feeling good about the systems that you're onboarding. I think, as Sharon mentioned, we have, over 80% of our customers are public. And so much of what we've designed the tool around are those, control requirements and considerations when onboarding a system. Ryan, I thought your comment, if IT is not involved in the implementation, then a lot of times, you can have this, it can be a bit challenging to ensure that you're maintaining kind of the IT controls around the implementation. What we've discovered kind of through the 5 years of implementing our customers' environments is that it's super important to get IT and the governance work stream kicked off quite early. So what we have is a pretty strong implementation roadmap around that specifically to ensure that we're meeting kind of the thresholds and controls required for system implementations. Outside of that, I think all of the the requisite, user permissioning, we'll talk through kind of segregation of duties and how that's facilitated in our tool. And kind of most importantly, how we can do a lot of or meet the needs around kind of documentation of evidence of review. Ryan talked a lot about ensuring that those, your clinical operations counterparts are in there. And so making sure that we can document all of that review is a really core kind of tenet of that controls piece.
Thanks, Erin. So we'll zip through this really quick. Ryan mentioned some of the key auditor procedures that relate to this cost category. And when you think about a system, of course, as mentioned, thinking about SOC supporting controlled protocols and being SOC 1 Type 2 compliant. Auxilius, just a little bit more about us. We're backed by robust data security, IT process controls, and transactional process controls with automated inputs from invoices, vendor estimates, EDC data with rigorous data quality checks for completeness and accuracy, really reducing, again, that potential for manual data errors, and organization-wide data platform and information security programs in place and tested on at least an annual basis as stipulated by our controls. We know the challenges with the status quo, as we talked about earlier. And a challenge from a preparer and audit perspective is the pure gathering of the huge range of data and documents that relate to R&D expenses, given the scope and so many third parties involved to perform much of the work. So having information needed to be produced for audit in a readily available, organized manner is a huge gain and a key tenet of our platform. Understandably, there are two distinct languages and sets of priorities between finance or controllership and their R&D and clinical counterparts. Ryan touched a little bit on this too. And from an audit perspective, this is really a critical procedure to corroborate what is being reported financially to what has actually happened in the trial and the period. Auxilius is that unified platform that's driving alignment and communication across clinical, financial, and accounting teams, which otherwise were conversations and interactions that would be extremely lengthy. This is bringing this together as one system of record, establishing a single source of truth that activates input, review, and sign off from ClinOps alongside finance. Auditors, rightfully so, they care about what actually happened in the trial in that period, and ticking and tying between contracts, POs, obtaining that cost information directly from vendors, and corroborating with the sponsors, finance and clinical teams. So this audit corroboration is bolstered when, in addition to third-party data, life science companies are now able to pair up clinical activities in the period to contracts at the site level for much more precision around that estimate. As Ryan mentioned, that's a huge piece in terms of looking at the kind of veracity and the level of detail in that review. Investigator spend is a cost category that is quite volatile and material to an R&D expenses. And that is one of the key benefits of having a tool like Auxilius in place that is teeing up an evidence-based estimate for the accrual, because oftentimes data might be lagging from sites and investigators, but EDC, electronic data capture, is telling the real story on that per patient level. And want to highlight the importance of documented evidence of review, given the audit challenges. It's important that companies keep their own view of what occurred in the study to corroborate against other evidence sources. And this is where, from an audit perspective, preparers can show that they're not at risk of relying on potentially incomplete evidence or taking a vendor estimate at face value and not having more substantiating detail. In Auxilius, companies are setting a forecast methodology upfront, determined by management, customized to the study, utilizing main drivers. And the timeline and the forecast are dynamic and responsive to trial changes in real time, with actuals informing the forecast. Lastly, typical audit procedures, again, completeness and accuracy. We know too often investigator and sites lagged. I mentioned that. So, really ensuring that completeness and accuracy is, as in our view, and as we hear across our auditors of companies that we serve, that's really kind of the gold standard, is to maintain your own view based on clinical evidence. So Auxilius provides an auditable documentation trail substantiating all those contributing inputs, including the predicted costs in the period. So last thing before we jump into product, we know from the language in CAMS that R&D constitutes that high auditor burden of effort. And you can see on the pie chart here, the firms that audit Auxilius customers, and it's all of the big four and then some. We hear that the audit review process is improved. So we love to hear that. Why? It's, as we mentioned, the SOC 1 and SOC 2 compliance. We are a single tenant, single sign-on, encrypted and secure, with robust user-based permissioning across the platform. It's the reduction of manual errors. Evidence also being in thorough documentation in an audit-ready package and format for an exportable audit history. And configurable approval workflows with records of change demonstrating clear segregation of duty. And we're just about at time here. So, I think our call to action and our next steps would be, if you want to learn more, again, as Erin mentioned, there's a whole lot more to look at within the Auxilius platform, but wanted to touch on sort of the highlights as they relate to today's topic. But if you do want to learn more, spend more time in a demonstration, please reach out to anyone on the Auxilius team. I will put our emails here in the chat. Same with Ryan and his team at Crowe. They're a strategic alliance, trusted partner of ours. We think the world of the Crowe team. So if you have questions or need some advisory support, please make sure that you reach out to Ryan. But we want to thank you all for being here today, and hope that you enjoyed and found some good benefit here with the webinar. And we hope to see you again soon.